Bitcoin's price has been fighting to continue in a bullish outlook since last December in no wane. After invalidating a double top reversal pattern on the weekly time frame, Bitcoin price is now faced with a much more glaring situation as a possible head and shoulder reversal pattern threatens to push the instrument even lower. Bitcoin's Coinbase premium index has dipped into negative territory, so don't forget to subscribe, like and share, and let's start. Starting off with, Bitcoin had its first 20% correction in almost a year and everyone panics, find an OG of 2016 Halloween and ask if they even notice anymore. Also, liquidity moves the Bitcoin market, and if there is a lot of liquidity being built in a certain region, it will be grabbed. There is still lots of liquidity lying around 39,500, as I still believe there's a big chance this will be grabbed. And looking at it, those are long positions with over a $1.5 trillion right there. But also, what do we have here as well? So if Bitcoin gets to 44,290 million of short will be liquidated. So we have both positions, the one is long and the one is short, but long is kinda higher. As we could see, they're probably at the 39,000. There's a lot around $1.5 trillion. Also some located at 41,500 and 290 million to 44,000. So a lot of liquidations might happen in a short period of time. A report by the US Energy Information Administration reveals Bitcoin mining uses 0.6 to 2.3% of US electricity and 0.2 to 0.9 globally. The CBECI estimates put electricity supporting Bitcoin mining in 2023 at about 0.2 to 0.9% of global demand of electricity. That estimate represents 0.6 to 2.3% of all the United States electricity demand in 2016. Also, we go for the JP Morgan releases this chart of flow into gold versus Bitcoin funds. Bitcoin is smoking gold. Peter Schiff, what's going on? Bitcoin, new gold. Chart A36, cumulative flows in all the Bitcoin funds and gold ETF holdings, and both the y-axis and billions of dollars. So all Bitcoin funds versus gold Ethereum, so gold ETFs. All I'm saying, Bitcoin ETFs are going higher while the gold ETFs are constantly continuing to fall. Bitcoin ranks 16th in the currency and 10th in the global asset. Fewer than 1% of all adults gets its importance. Only 21 million Bitcoin will ever exist, with 19.6 million held for long-term savings. No supply cap unlike other currencies. Get ready for a wild next decade. And here you could basically see that as gold continues to slowly fall, while we are expecting the Bitcoin growth up to higher positions. As of now, still gold holds $13.9 trillion of assets, 3 trillion at the Microsoft, 2.9 trillion at Apple, 2 trillion at the Saudi Aramco. Alphabet, which is Google, holds 1.7 trillion, Amazon 1.6, Nvidia 1.5, Silver 1.3, Meta Platform, which is Facebook 1 trillion, and Bitcoin at 860 billion alone, but it's just the start of its massive growth that we are about to notice soon. Bitcoin to 45,000 in the upcoming days. From Ichimoku perspective, Bitcoin after getting stopped by Kijun seems to be follow the SSA of the Kumo cloud that could lead the price to 45,000 in the upcoming days. Note that the lagging span behind this is about to have room to go up. Also, breaking news, the Biden administration has issued an emergency data collection initiative to identify the electricity usage of the Bitcoin mining industry in the US. The US Bitcoin ETF fee war is spilling over to Europe as these last weeks CoinShares, WisdomTree, and Invesco all announced fee cuts for their physically backed Bitcoin ETPs. Prices were cut in half or more and aligned with new competition from Bitcoin ETFs in the US. Great to see how competition from overseas, even though the US ETF are not accessible to Europe retail consumers, so still leads to lower prices and benefits consumers here in the Europe. And it's going to be interesting to see how this affects fees at crypto exchanges as well, some of which appear quite expensive in comparison. There we go with more, as Bitcoin price crash is inevitable. How long can Bitcoin price drop this month? So the Bitcoin's price has been fighting to continue in a bullish outlook since last December in no wane. Moreover, on-chain data shows that Bitcoin miners have started selling their holdings again despite Grayscale investment significantly reducing its selling pace. As a result, Bitcoin bulls face a challenging time in the near term, but the macro rising trend stands. So why bet on Bitcoin bears in the short term? After hiring a psychological resistance range between 44,000 to 49,000 in the past few weeks, it is now evident Bitcoin price has been mirroring the previous bull cycle as using this cycle Fibonacci retracements, and Bitcoin price has always faced significant resistance around the 0.618, which coincided with the resistance level around the 44.5 thousand before retracing towards 0.38.2 level, which coincides with the support level around 35,000. Continue to think we go lower to consolidate than most people expect due to the variables that are too many to explain in detail via tweet. So as for the denial out there, it takes time for parties to sober up. So nevertheless, the anticipated Bitcoin price correction is expected in the coming weeks before the fourth halving in April, and furthermore, a recent study has revealed that more than 80% of all the global investors believe that Bitcoin price will rally towards a new all-time high after the upcoming halving. Market picture: a Bitcoin price drop in the coming few weeks has been described as an opportunity for the altcoin to shine. So the altcoin market has already successfully retested a macro bullish breakout amid heightened demand from the global investors. Some top-tier altcoins like Chainlink and Solana have already shown early signs of the inevitable bullish breakout. Also, next up we go. The Bitcoin trading in Coinbase sees another decline, and why that? Following a brief moment of interest between the 27th and 30th of January, US-based investors are pulling back from trading Bitcoin on Coinbase. And the Coinbase Premium Index, which tracks the difference between its prices on the Coinbase and Binance, has dipped back into the negativity territory, suggesting less trading activity on the US-based exchange. And according to data from CryptoQuant, due to the decline in Bitcoin's value, its CPI value was negative for most of January. And soon after the ETF approval on the 10th of January, Bitcoin's CPIs turned negative and so remained till the 27th of January. Between the 27th and 30th of January, the index briefly turned positive, signifying a potential increase in US investor activity. However, as the coin's price continues to face significant resistance at a $43,000 price mark, its CPI has fallen back into negative territory at the press time, as Bitcoin's CPI was 0.009. And confirming this is the coin's Coinbase Premium Gap trend. Similarly, for CryptoQuant's data, when Bitcoin's CPG is negative, it means that a coin trades at much lower price on Coinbase than on Binance due to the plethora of reasons ranging from the market imbalance and liquidity issues. And while the US-based investors shy away from trading the leading coin, Asian investors have adopted the opposite approach. As Bitcoin's CPI comparison with its Korean Premium Index, which measures the price gap between how much the coin trades on South Korean exchanges compared to global exchanges, showed that Asian investors continue to intensify accumulation efforts. Although when observed on the 30-day moving average, Bitcoin's KPI has trended downward and it remains in a positive territory, suggesting that Asian investors continue to favor accumulation. That's all the information we got on today's video on the Bitcoin, so if you are interested in more, don't forget to subscribe, like, and share. See you in the next one, and peace.